Hello and welcome to the channel. Welcome traders, welcome investors. Welcome to the TMP group. I'm Tom and today is Thursday, November the 18th, 2021. Kind of a rough day in the market today. Looks like we're down across the board as far as the Dow Jones, the S&P, and the NASDAQ. And there's a lot of red tied into our portfolios here today. Most of our trades and investments are tied into the NASDAQ and the Russell, and all indices down. But we do believe that brings a good buying opportunity. As you know, most of our trades and investments are long-term holds. So we continue to hold through the dips, buy through the dips when we can, and wait for the rips. I just want to start off by saying that this is not financial advice. The TMP group, we are not licensed traders or brokers. I am not a financial advisor. This video is for entertainment purposes only. So let's keep it as entertaining as possible. I just want to get cut right to the chase and talk about two stocks today that are very opposite stocks when we talk about stocks. However, they have a ton in common. And one of the things that we think they have in common is that both of them, when they do pop, are ready to rip and rip hard. So if you like what you hear today, leave me a big thumbs up. If you want to put something in the comments, please fill the comments up. And most importantly, if you want to hear more from us, subscribe to the channel, share with your friends and family. If you think this information is good information and you want to hear more of it, we do try to cover a variety of different stocks that are in our portfolio, new plays, plays that we're adding on to, plays that we're getting out of, and of course, keep up with us on the trades and investments that we have. So the two stocks I want to talk about today, like I said, they are polar opposites. Couldn't be any different. However, they couldn't have more similarities as far as where they are in the market and how the market's treating them. So those two stocks, with no further ado, are number one, NIO. And NIO trades under the ticker symbol NIO. It is the Chinese electric vehicle stock. And the other stock is none other than DraftKings, the king of the draft. It trades under ticker symbol dkng. So NIO and DraftKings, how opposite are they? One's an EV stock, one's a gambling stock. How similar are they? Both of them are in the tank right now. Both of them trading under $40. We think both of them are great buys under $40 if you're looking for a long-term investment. Again, this is just my opinion and the collective opinion of the TMP group, not financial advice. However, I do want to do a deeper dive and just kind of let you know what's going on with both stocks, where we see them going, and what kind of future we have with them, and why we're holding on to them and even adding at these levels. Again, today is Wednesday, I keep saying Wednesday. Today is Thursday. It's November the 18th, 2021. So whenever you're watching this video, just keep that in mind. And let's jump right in. So let's start with NIO, Chinese-based EV. By far the largest Chinese-based EV. Understanding that Tesla is in the China market, NIO's two competitors are Li Auto and XPeng. And both Li and XPeng have been running, while NIO has been just sitting quietly and going down. We love NIO. We've been in NIO since early 2020, and here's a couple of reasons why that we like NIO, and we think that NIO is poised for a breakout. Even though we believe that the EV market, or we've seen the EV market kind of sell off a little bit and settle down after the past hot run that it's had the last couple of weeks, we think NIO has a long way to go. So let's jump into NIO. Chinese EV company. Currently, NIO, things that really make it stand out is its battery swapping service. So if you're not familiar with NIO, NIO has a battery swapping service. Rather than having a plug-in service, they have a battery swapping service, which is much like going and getting your gas tank filled up. You can go to one of their NIO houses or battery swapping stations, and you can exchange your battery. So if you have a depleted battery and you drive a NIO in China, you can pull into a battery swapping station, and you can swap out the depleted battery for a new battery in about 5 minutes or less. I don't know about you, but the last time I filled up gas in my truck, it took me more than 5 minutes. The beautiful thing about the Neo battery swapping service is you pull in, it's automated. They swap the old battery out, they put a new battery in, and you are on your way. Now, Neo has more than 500 battery stations across China and plans to install its first battery stations in Norway, where it recently just expanded. So Neo is also expanding their footprint in Norway and Europe, Germany coming soon. And they're building more of these battery swapping stations. In October, Neo reported that it completed more than 4 million battery swaps since the first station opened in 2018. So since 2018, it's had over 4 million battery swaps. So they understand, pull in, swap your battery, get out, and have a new battery and keep driving. Now, the company said it plans to be operating 700 battery swapping stations by the end of the year, and 4,000 battery swapping stations by the end of 2025. So they're looking to expand. They're looking to expand rapidly, massively. We love that for the stock. We think that Neo is poised for a high run. The battery swapping program is a huge selling point for me personally for Neo. Beijing also is giving generous credits because of the battery swapping service. So it makes it another selling point for Neo. And, Neo is the clear leader in battery swapping technology. We do believe that there will be competition, and competition strong with Neo in the form of XPeng and Li, and we welcome that. So, what else about Neo? Let's see, deliveries. So deliveries in the second quarter, Neo delivered 10,331 vehicles, which was a 191% increase from a year earlier. And according to the CEO, William Bin Li, the company is increasing its deliveries and sees strong customer demand. So in June, the company received a large cash infusion from Tencent Holdings. And at the end of June, Neo had more than, what is the number here? 1.6 billion in cash infusions and equivalents. Third quarter outlook for Neo. Remember, they're going to report third quarter. The company doesn't believe the second quarter growth was a fluke, and it's expecting growth to continue through the third quarter and fourth quarter as well. So Neo expects to deliver between 11,000 and 11,500 vehicles during the third quarter, and expects revenues to fall between 572 million and 596 million. This would be a big improvement from the company just a year earlier. So lots of upside for Neo. Why is Neo late to the party? Neo has competition. Neo is a Chinese stock. People's Republic of China. You can call it what you want. We believe in Neo. We hold Neo as a long-term buy. We do believe that under $40, where Neo is trading right now, is a strong buy with a price target in the next 12 months to be somewhere around $60 or more. Now, if you've been in Neo, you've suffered a lot of highs and lows, more lows than highs. And, we look forward to the day that Neo can just grab that run and make it up. So we believe in Neo. We're strong. We have a strong buy on Neo right now. DraftKings. What's going on with DraftKings, the king of the draft? Well, I'll tell you this, that if you go to DraftKings.com and you look up their press releases, you can find out what's been going on with DraftKings. I like to take a look and see every single day what's new with DraftKings because they are making moves. They're very active in the sector, and DraftKings, we believe, is the leader in online gambling and online sports books. So really quick, just starting in November 1st, DraftKings teamed up with the Pat Tillman Group. And those of you that know that I'm in Arizona, the Pat Tillman Group is very close to my heart. Pat Tillman was a player at ASU. He also played for the Arizona Cardinals, and he lost his life serving our country. So in honor of Veterans Day, DraftKings basically expanded their focus on what they call their DraftKings Serves, and they donated over $1 million to support the veteran-based organization DraftKings Serves. Okay, so what happened on November 4th? The 4th of November, the NBA announced that it expanded sports betting and daily fantasy agreement with DraftKings. So DraftKings is tied in heavily with the NBA. On the 5th, is when DraftKings had its earnings. Now, we saw DraftKings kind of trading sideways for a while, and then it dropped on earnings. Why did it drop on earnings? Good question. It did meet guidance with third quarter revenue exceeding growth of 60%. What I was most concerned with was its MUPS, which is its monthly users, people that have gone on there and that have placed a bet within at least one bet consistently every month. And I'll raise my hand and say that I am one of those people that bets with DraftKings. I love DraftKings, maybe a little bit too much, but I do like my football and basketball and baseball. So I know I'm not alone. DraftKings has a lot of room for expansion. It increased its midpoint of 2021 revenue guidance to a $1.26 billion and introduced revenue guidance of $1.7 billion to $1.9 billion. So we're looking for an extreme revenue growth in DraftKings. Why is DraftKings trade lower? DraftKings trades lower because of competition. It's fighting competition with other platforms, MGM, Caesars, FanDuel. They're all vying for the same customer. Now, as a customer of DraftKings, I personally am only with the DraftKings platform. One is enough. But I know there are multiple people that are using multiple platforms. And the money that it takes to acquire a new customer, not taking lightly the fact that just to get into a new state, and they're in about 14 markets right now, we're talking about $20 to $25 million just for the application. So each state gets its own money. The state of New Jersey just reported that online gaming revenue came in at $680 million. $680 million. Now, if 14 states the DraftKings is in, there's 50 states that are up there, and we know that in the election that there were many states, the majority of the states, that said they were not opposed to making sports betting legal. If they can capture even half of those states, the revenue that DraftKings stands to take is through the roof. Let's keep going. On the 8th of November, Golden Nugget Lake Charles opened a new DraftKings retail sportsbook. So they're expanding in Lake Charles. They launched a new sportsbook there, and it's slated to open, and it did open on November the 10th, 2021. Then we go to the 12th of November, where DraftKings opened up their sportsbook / restaurant / gaming center at Foxwood Resort Casino in Boston, Massachusetts. So they're moving. On the 15th, DraftKings backed into an international center for responsible gaming. So responsible gaming has to do with those people that have a problem with gambling or think they have a problem with gambling, and they give support to those that are addicted to gambling. So DraftKings is trying to help both sides. On the 16th, DraftKings announced a mobile sports betting deal with Booth Hill Casino and Resort. Again, making more partnerships and solidifying more relationships. On the 17th, so trailblazing gamer FaZe Clan teamed up with DraftKings. And that's kind of the biggest news so far with DraftKings, is that they teamed up with FaZe Clan. FaZe Clan does daily fantasy and free to play games. And then, of course, just today, the Boston Bruins. So today, November 18th, 2021, the Boston Bruins named DraftKings an exclusive daily partner for fantasy sports. Now, both DraftKings and Neo, like I said, they have a lot in common. What do they have in common? They're both late to the party. We see massive runs and massive gains ahead for these. DraftKings and Neo, what else do they have in common? They're spending a lot of money in acquisition. They're spending a lot of money in expansion. They're spending a lot of money that affects their bottom line. But you've got to spend money to make money. And DraftKings is spending money. Neo is spending money. They're both making money. We feel they're both solid companies. We're highly convicted in DraftKings. We're highly convicted in Neo. We invest in both of them. This is not financial advice, not a recommendation. I'm super excited to be able to pick up more shares of DraftKings and Neo under $40. Put a timestamp on this video. Come back to it 6 months from now, 12 months from now. If I'm wrong, I'm wrong. But I'll definitely put my money where my mouth is. I'll make the bet on DraftKings. I'll make the bet on Neo. I'll continue to buy on the dips. I like to say the best bet you can make in life is a bet on yourself. Bet on your future. Bet on the future of your children and your children's children. And make your money work for you. Because when I go to sleep at night, I know my money's working for me. When I wake up in the morning, that money's still working. When I come to work, my money is working with me. And when I come home, my money brings its friends home. So, when you are invested in companies that you understand, companies that you know, companies you can relate with, it's easy to take the dips that come. Because you know that in the future that these dips will turn into rips. So I look forward to doing another video in a short period of time, let you know how DraftKings and Neo are doing. I hope you follow the channel. I hope if you've made it to the end of the video, I'd like to thank you. Please give it a thumbs up. It helps with the YouTube algorithm. Please share the video with your friends and family and subscribe to the channel. Like I said, the TMP Group is a group of small private investors. We're just trying to build wealth for our family and our children's family and so on and so forth. And if that chain is not involved, if you don't have that chain in your family right now, start the chain. Start investing. It doesn't matter whether you invest $1, $5, $500, $5,000. I've left links below to Robinhood. I've left links below to Webull. Those are 2 places that you can buy fractional shares. I have people come to me all the time, say, Tom, I want to get into Amazon. I want to get into Google, but I can't afford the stock. What should I do? Buy fractional shares. Put something in to the market, and you'll get the same percentage return. If you want to make $1 million, how much do you have to invest? You probably have to invest $1 million to make $1 million. That's 100% return. So it's up to you. We sure appreciate you stopping in today. If you are a crypto trader, we left a link to Coinbase. Coinbase is giving away, I think, $10 in free Bitcoin just for doing an ID and email verification. Can't hurt if you're already in it. Realize that the Bitcoin options expire on Friday. The puts outweigh the calls about 38 to 1. And that's why we're seeing a decline in crypto right now. We do expect a bounce back. All right, it's Thursday. I know it was a tough day in the market, at least it was for our portfolios here, but it did serve as a buying opportunity. It's important to have cash on the side. If you don't have cash on the side, set some aside. And we sure appreciate you stopping in. Again, share and like this video, and we hope everybody had a great day today, and we can't wait to talk to you tomorrow. Thank you.